Infosys has reported its third quarter numbers. Rima is standing by now to take us through the report card. Rima, Infosys on the face of it, in line with expectations or better than expectations?
In line with expectations, with a constant currency revenue growth of about 0.6% quarter on quarter. On a year-on-year basis, it's a growth of 1.7%. So this has come bang in line with street expectations. On the margin front, though, there is a slight bit of a disappointment. The company's margins have come in at 20.8%. This is a decline compared to 21% that they had clocked in the prior quarter. Now, how does Infosys numbers compare with peers? Infy has clocked in a 0.6% top-line revenue growth. This compares with 0.8% that TCS had. And HCLTech was, of course, the standout performer with a 4.2% growth. But on the services side, HCLTech's top-line growth was about 1.5%. But in line with expectations, what we are awaiting is the revenue, because after about a 0.6% top-line revenue growth, it's likely that the company is going to end the year closer to the upper end of its guidance. Currently, the FY26 guidance stands at 2 to 3%. The expectation is that the company will narrow the guidance. So on the face of it, the numbers look good. Okay, here's the number. The revenue growth guidance has been upgraded. The revenue growth guidance was 2 to 3%, and it now stands at 3 to 3.5%. So this is not a narrowing of the guidance. This is an upgrade of the guidance. The new guidance stands at 2 to 3%. Operating margin guidance remains unchanged at 20 to 22%. Just to backtrack, when the company started the year in April of last year, they started the year with a 0 to 3% guidance. So a very broad guidance on account of the uncertainty. There was discretionary spending. There was no sign of it picking up. AI was changing the game. So they started the year with 0 to 3%. Progressively, they upgraded the guidance. 0 to 3 became 1 to 3. Last quarter, it became 2 to 3%. And this quarter, the company has raised the guidance further to 3 to 3.5%. So we'll wait by to see what the implied Q4 revenue on the back of this is. But this is a positive because current street expectations were for a top-line growth of about 2.7 to 2.8%. Now that the company's raised the guidance, there is a marginal increase to the company's overall revenue. Deal wins are also very strong. Deal wins have come in at $4.8 billion. And this is ahead of the number in the prior quarter, which was about, there you have it, $3.1 billion in the prior quarter. So just to illustrate the numbers, revenue growth has come in line, slightly ahead of expectations, 0.6%. The company has raised the full-year revenue guidance, 3 to 3.5%. Deal wins have seen a pickup, $4.8 billion in total deal wins, which includes renewal of that 57% is new. And the other important metric is the the headcount addition. Remember, TCS has been bringing down and rationalizing its headcount. In 2 quarters, TCS's headcount declined by 30,000. In the case of Infosys, in 2 quarters, the headcount is up 13,000. Generally, an increase in headcount is also seen as a leading indicator of demand. So these are the positives. On the flip side, maybe you can quibble about a slight margin decline, 20.8%, but again, not too much. Moshe Khatri, Managing Director of Investment Banking Division at Wedbush Securities, is now joining in. Moshe, thank you very much for joining us. Your first read?
This is typically a weak quarter for the industry. So relative to expectations, I would say that the delta is much better. The booking numbers were very bullish. I would say that the headcount additions are typically a proxy for demand. And we're not even looking at fiscal 27 yet, right? So the fact that they raised guidance is also pretty optimistic. So net, I would say it's a win. It's definitely a win for Infy.
The deal wins were expected to be strong because in the quarter, the company had won a very large 14,000 crore deal win from NHS UK. That was about $1.5 billion. It was UK pounds. It was 1.2 billion, so 1.5 approximately in dollar terms. So that would have boosted the company's deal wins quarter on quarter, which is what explains $4.8 billion in Q3 versus $3.1 billion. But as Moshe said, headcount is often seen as a proxy for future demand, and the company has been adding headcount. Anshul Jeti of LKP Securities also joins in. Anshul, versus your expectations, how did the numbers fare?
Hi. So pretty much after a strong H1, the management raised the guidance by 1%, I think 2 to 3% as you highlighted. So it was pretty much expected that H2 is going to be seasonally soft, as historically, the trends say. So pretty much flattish kind of growth was expected out of them. Deal wins still are strong. The headcount increase trend, which we saw in the Q2 as well has continued very well for the Q3 as well. So that's a big positive. Other than that, I think mainly growth has been led by Europe segment. Europe is still strong, and with the new NHS deal win last quarter, I think Europe is going to be strong for the next period as well.
Did the NHS contract contribute in Q3? I mean, is that the reason why, Anshul, you think?
No. I don't think so. The contract contributed to Q3 as of now. But I think we'll get a better clarity from the management in the coming call.
Okay. And if you had to compare Infosys with TCS and HCL Tech, what would the pecking order be? What stands out for each?
Yeah, so fundamentally speaking, I think HCL is doing very well. But on the other hand, when we look at valuations are pretty comfortable. Nifty IT has also corrected. TCS has corrected quite a lot. So historically speaking, both three of the companies are trading around in the range of 23, 24 P kind of range. So I think TCS is quite comfortable if we go by valuations, and by fundamentally looking, I think HCL is performing quite strong at the moment.
Moshe, if you look at the shareholding pattern, the FI holding in Infosys has come down. As of December, it stands at 29.5%. In December of last year, it was 33.3%. And generally, we know IT has been an underperforming sector and money has been pulled out of large cap IT names. So what are the top investor concerns? When we speak to the management, they will be addressing the media very shortly. What is it that you would like to hear from them, and what would be your top questions?
The sector has had a negative sentiment probably for a couple of years now. And a lot of this is a function of concerns related to how AI is going to impact the sector. The bear case is that revenues and margins will get cannibalized. The bull case is that maybe that will create a new spending cycle. I bet that this industry will be able to reinvent itself the way it did, 8-10 years ago when everybody was worried about cloud. And we will get that spending cycle that the bull case kind of focuses on. So there's going to be a lot of focus on Gen AI. There'll be a lot of focus on reskilling, a lot of focus on how the model is going to change, decoupling revenue from headcount growth. That's number one. Focus more on performance-based contracts. This is going to be the new model for the industry, in our view, down the road, especially for companies that want to kind of ride that Gen AI, spending wave.
TCS and HCL Tech have started articulating the AI revenue contribution, giving you more metrics surrounding AI. Do investors want Infosys also to do the same, or AI is so pervasive, as Accenture said, they were early on in articulating AI and now they've stopped quantifying it and it's fine with the investors?
I'm assuming Infosys will quantify AI-related bookings. I think this will be a proxy for where the company is specifically in this area. And then ultimately, just because it blends with everything else, I would say companies will stop reporting that. But I think the tier ones are doing exceptionally well in terms of adjusting the skill base and focusing on this new spending cycle. And, I'm actually optimistic about fiscal 27.
Thank you, both of you, Moshe and Anshul, for joining us and giving us your initial read. We'll wait by for the Infosys press conference. But as I hand it back to Shireen, it's a good showing by Infosys. And now Infosys is the third large cap IT company which has delivered operationally. This has been a tough seasonally weak quarter where there are furloughs, client shutdowns take place. So expectations were not very high, but it's been a steady showing. And Infosys guidance upgrade perhaps will go down well. They're now guiding for a 3 to 3.5% top line growth in FY26. Back to you.
And as we saw in the case of TCS and HCL Tech, the labour code impact playing out here as well, Rima. But that important point that you made about the headcount addition, over 13,000 people hired by Infosys in Q2 and Q3 combined together versus what we've seen in TCS, where we've actually seen a significant reduction, a 30,000 reduction in headcount. But we will, of course, decode more with the management. That's coming up after the short break. When we return, Iran accuses